You ever watch a company that just seems to be doing everything right? I mean, they're revolutionizing an entire industry, but then you look at their stock and it's just flat, or maybe even going down? Well, today, that's exactly the kind of story we're diving into, and the company at the center of it all is Venture Global.
So this is the big puzzle we're going to try and solve today. How on earth can a company that is literally changing the game in the global energy market look, at least on the surface, like a total train wreck of an investment? It's a huge paradox, and the story behind it is, well, it's pretty fascinating.
All right, so to really get what might be going on with Venture Global, we need to talk about a pattern that you see pop up in the market from time to time. It's a pattern that's common with what some people call cult stocks, those companies that get this incredibly devoted, almost fanatical following of believers.
And this pattern, it's not new. Just think about companies like Palantir or Rocket Lab. They came out of the gate with this huge burst of hype, right? But that was followed by a long, kind of painful period, the shakeout, where the stock just chops around, goes sideways, goes down, and it really tests your patience. And Venture Global's chart, man, it looks almost exactly the same. It had that first wave of interest, and now, yep, it's deep in the shakeout.
So this whole journey, it usually happens in 3 stages. First, you get the hype. Everybody's excited, everyone wants a piece. Then comes stage 2, the shakeout. And that's exactly where we are with Venture Global right now. This is the messy part. It's full of uncertainty, and it's designed to shake out all the people who aren't true believers. And then, if the company keeps executing, you get the liftoff. The business proves itself, hits an inflection point, and the stock just takes off like a rocket. So the billion-dollar question is Venture Global getting ready for that third stage?
So let's talk about why people are so bullish in the first place. I mean, why would you believe in this company and stick with it through that painful shakeout? Well, it all boils down to one simple thing: incredible execution.
And here's the absolute key to the whole bull case. Venture Global is building these massive, incredibly complex energy projects at a speed that the liquefied natural gas industry, the LNG industry, has literally never seen before. I'm not talking about a small improvement here. This is a complete revolutionary leap forward in how fast this stuff can get done.
So how are they doing it? What's the secret sauce? It's this absolutely brilliant idea called modular LNG trains. See, instead of building these monster liquefaction plants from scratch on site, which takes forever, they have the core parts, the trains, pre-built as standardized modules in a factory in Italy. Then they just ship them over, plug them in, and fire them up. It's basically industrial-scale Legos. It's genius. And the results, I mean, look at this. It's just staggering. For the rest of the industry, the average time to go from a final investment decision to actually producing gas is somewhere between 7 and 9 years. Venture Global, they're doing it in about 2.5. That unbelievable speed is their killer competitive advantage. This quote from our source really nails our whole philosophy. These guys aren't just hiring contractors and hoping for the best. No, they are taking the bull by the horns. They're involved in everything. And with every single project, they learn, they iterate, and they just keep getting better, faster, and cheaper. They are a true execution machine. Okay, so if they're this perfect execution machine, what is the problem? Why isn't the stock reflecting this? Well, that brings us to the big, ugly headwind. A massive, multi-billion-dollar legal fight that's casting a huge shadow over the whole company. And this whole gigantic conflict, it all revolves around one kind of technical-sounding term. To get what's happening, you first have to understand what commissioning cargoes are.
Okay, so here's the deal. When you build a brand new LNG plant, you don't just flip a switch and it's at 100%. There's this whole ramp-up and testing period. Now, during this phase, the plant is actually making LNG, but it isn't officially declared commercially operational yet. And those first few shipments that go out during the test phase, those are the commissioning cargoes. And this is where all the trouble started.
So here's the timeline of how this all went down. Venture Global signs these big, long-term contracts to sell gas to partners like BP and Shell at a fixed price. Simple enough. Then their first big project, Calcasieu Pass, enters that commissioning phase we just talked about. Well, right at that exact moment, global gas prices went absolutely parabolic. So Venture Global took all of those commissioning cargoes and sold them on the open spot market for a massive profit, instead of delivering them to their partners. As you can imagine, those partners were not happy. They sued, filing for arbitration, saying, hey, that was our gas.
So you have 2 very different stories here. Venture Global's argument is basically a technical one. They say, look, the plant wasn't commercially operational yet, so our long-term contracts hadn't kicked in. We were free to sell that gas to anyone. But their partners are saying, are you kidding me? We had a deal for the gas from this plant, and you just sold it out from under us to make billions while we got nothing.
And this is the whole reason the stock is in the gutter. It has nothing to do with their operations or their technology. It's all about this legal mess. These arbitration cases create this giant cloud of unpredictability. And if there is one thing that the market absolutely hates, it's uncertainty.
But, for a certain type of investor, all this short-term mess, this uncertainty, is exactly what creates a massive long-term opportunity. So let's try to look past all the legal drama for a minute and focus on the core investment thesis here. So when you're trying to value a business like this, one that's all about huge infrastructure projects that just gush cash, you can't just look at revenue. The real number, the metric that truly tells the story, is EBITDA. That's your earnings before interest, taxes, depreciation, and amortization. It's the purest look at how much cash the operations are actually generating.
And right now, today, even with all this craziness going on, the business is an absolute cash machine. This year alone, it's on pace to crank out around $6 billion in EBITDA. That is a huge, huge number for a company with its current stock price.
But that's just the beginning. The truly mind-blowing part is what happens next. As their new, even bigger projects come online over the next few years, that potential annual EBITDA could soar to $15 billion, or maybe even more. The growth ramp here is just enormous.
And this chart really shows you the potential disconnect. Right now, the company's market cap is hanging out at under $20 billion. But if they hit those EBITDA numbers we're talking about, a valuation north of $100 billion is not some crazy fantasy. It's a real possibility. And that is the huge multi-year opportunity that the bulls are looking at.
Look, this isn't just about building one or two successful projects and calling it a day. The ambition here is so much bigger than that. What we could be watching is the birth of a brand new global energy giant.
I love this quote from the source material because it's just such a powerful way to think about it. Qatar is this tiny little country, but it's an energy superpower, all because of its LNG. Well, the argument is that Venture Global is basically building a mini Qatar's worth of export capacity all by itself, right here in the United States. A single company that could rival an entire nation. It's wild.
So the long-term vision here is crystal clear. They want to be the biggest LNG company on the planet. They want to control a huge chunk of all U.S. gas exports. They're even buying their own fleet of ships to control that part of the business too. The end game is to become this absolute cash flow behemoth that can pay down all its debt, fund all its own future growth, and still have tons of money left over to return to shareholders with dividends and buybacks.
And so we end right back where we started, with this paradox. On one side, you've got a messy, high-stakes legal battle that creates very real risk. But on the other side, you've got a flawless execution machine that's on a path to becoming a global supermajor. Right now, the market is pricing in the legal fight, but it might be completely ignoring the revolution that's happening underneath. So the real question for any investor is this short-term uncertainty a risk you should run away from? Or is it the kind of opportunity that only comes around once a decade?